Welcome to today's session on AML, a bit of an accountants forum. Today is designed so that we can assist you in your AML journey. This one is, we're specifically going to hot topic on the designated services and got some questions for Ags. Welcome, Ags.
Thank you very much. Hi, everyone. Welcome to our AML inaugural AML Accountants Forum.
So we are going to try and hold this every month or 2 weeks, depending on how hectic and busy it is, Ags.
Yeah, that's right.
Excellent. I'll just go to the next slide.
I'd look just a quick intro. Most of you probably would have already seen this, but in case you haven't, so who are you talking to? Who's talking to you today? Just so you can understand that I'm not just some any old schmo off the street, as they say. So look, my name is Agnieszka, or Ag or Ags, and please feel free to ask questions, by the way, as we go. Either type them in, and Clayton, you're going to pick them up, right?
Yes.
And so I specialize in the implementation on financial crime risk solutions in Australia and globally. I've spent 20 years in UK working in financial services, predominantly in banking, implementing these solutions. I've worked in about 7 banks now across multi-jurisdictions. I started working in fin crime when the large fines started coming out from the regulators globally, and I've been working in this space ever since because sadly the fines are not abating; they may be increasing. I've worked in HSBC and Combank, Barclays, Lloyds Banking Group, Cootes, the Queen's Bank, Bendigo and Adelaide Bank, and I have quite extensive experience in when things go right and when things go wrong. Hopefully I can bring that to our conversations today. All of the organisations I've worked in were under quite considerable regulatory scrutiny, and all were either sitting in large fines. At the early days, we thought 280 million was a large fine, but no, that was eclipsed by 1.2 billion for HSBC and 9 billion for BNP Paribas, of which I did not have anything to do with. They got fined again, by the way. That was all the US regulators who have very sharp teeth when it comes to enforcement of their regs globally, but AUSTRAC do as well, who are our regulator here. And obviously, you probably have read Westpac had a 1.2 billion fine a couple of years ago. So those punitive actions are not going away. Clearly, we won't be getting 1.2 billion in this size, but there will be, penalties and enforcement undertakings for those organisations that do not look like they're doing anything or who blatantly or flagrantly ignore the new regs. So today we're going to talk about designated services. And before we dive in, I thought I'd give you a kind of recap of your overall obligations. So the designated services, if you will recall, is your tap, is your valve that turns on your AML pipe. That will then determine how you treat those customers across the AML workflow. You have designated services. You have the AUSTRAC enrolment, which is key, which starts next March, end of March it starts, so next April. You have an AML compliance officer role that you're going to need to put in place. You've got the program and policies, which is your AML master Bible, and the policies and the procedures that hang off that. You've got your risk assessments, both at the customer level and at the business or enterprise level. I did toy with the idea of talking about risk-based approach and risk assessments today, but I was slapped down by Clayton saying that's way too much. It's December, it's Christmas. What are you talking about, Ag? So we will do that in January. He is right. I got excited. And so it's a key part though, because that risk assessment is essentially starts your journey on the AML workflow and the AML pipe, putting that risk lens onto really looking at your customers in a slightly different way. Then you've got your CDG, which is technically part of AML program, but I've called it out because it's a very core part of what you do. It is the guts, really, of your AML legislation. So knowing your customers and knowing whether they're politically exposed persons, understanding who their connected key parties are to if they are an entity, doing politically exposed screening and sanction screening, and then checking that information as we go. Like, it's a big old chunk. And maybe we actually dedicate another session later, Clayton, to CDD, because that's the guts of the pipe of the AML.
I'm sure it'll come up.
I'm sure it will come up. Yes, it will. Then you've got your reports, your AML training, your staff and awareness training, transaction monitoring, which is also part of your program, but it's around understanding what type of transactions your customers will be undertaking and whether they fit the profile that you expect from that customer, and then obviously record keeping, which is what it says on the tin.
And we did go through this in more detail in the other webinars.
Yes, so there is a recording, as Clayton did remind me earlier as well, of this. So you can go and listen to our dulcet tones talking through this and some other things from 2 weeks ago. So busy slide. I'm sorry about that, but I thought let's put it all on one slide rather than cutting it over two, because we've also got some questions that Clayton's going to read out and which I will answer. That people raised a little while ago. And also, of course, we're very happy to take additional questions. So the reason so there's 9 services. There's 9 designated services for the professional services. That's lawyers, conveyancers, and accountants. You kind of sit under the professional services banner. And they're structured in this way. And what we've done, Clayton and I did earlier, is just have a look at the services that are probably more related to you guys versus those that are not. So if I just run through them, the top one of helping buy, sell, or transfer ownership of a new property, it's probably not accountants. I'd probably say though, Clayton, probably some of the larger accounting firms, and I mean the kind of the top end ones that are supporting quite large transaction flows, and they're probably on a different journey anyway.
99% of accountants.
Yeah.
This is not normal. We don't, that's what lawyers and real estate agents do. So. Yep.
So the second one is around helping a client buy, sell, or transfer ownership of a company, trust, partnership, or other legal structure. Happens often, absolutely. So this is where you are providing services to set up any kind of infrastructure, legal, company infrastructure to your clients by company, entity, trust, etc. And all of those types of changes will trigger a designated service, which means they will trigger the pipe. Next one's around holding or managing money or assets in client in connection with a deal. Again, Clayton's view is this probably happens less unless you're on the larger end of town.
I'd like, if anyone disagrees, I'd love them to comment as well. If many people do manage clients' funds, I'd love to know that.
Absolutely, yeah. Then we have helping a company or other structure to raise money, equity or debt in arranging financing. Again, some might, most probably won't, as we've said. Again, probably on the larger end of town, and probably involved with our legal profession partners. Selling an off-the-shelf company or transferring an existing or ready-made company to a new owner, absolutely. I don't know why it's going a bit dark on me.
That's okay.
Yeah. Okay. No, because yeah. So within within those, in terms of structuring on the ready-made companies. So in terms of these, we've got some examples here. Providing pre-registered companies to clients, transferring shares or directorship of dormant or inactive. And then really the risks are around, I'm just trying to read this quite well. Really the risks are around, the companies may be used, as you all know, shells within a multi-layered structure for entities which are then which utilize to hide through the different levels and through hopping through different jurisdictions, the ultimate beneficial owners and the ultimate owners of the funds going into those funds as they move into those companies. Number 6 is setting up on materially changing companies, trust, partnerships, and other structures similar. So that's essentially around incorporating on new companies, establishing new trust or companies, reorganizing structures, changing ownership, changing individuals within those structures, and then moving assets between entities as part of a restructure. Just on top of on these two, Clayton, did you have anything else to add from your perspective as to any other kind of examples or comments?
Lots of questions.
Pardon?
I have lots of questions.
Okay.
We'll just go through the questions, I think.
There are a few questions, yeah. Does anyone have any questions on 5 or 6? In fact, 4?
For which one, sorry?
So designated service 2.
Yeah. So Wayne's already come up with one. Do CGT clearance certificates fall into that first property point? So the first, what are CGT certificates? You get a document from the ATO confirming that a vendor is an Australian tax resident. So the purchaser doesn't have to withhold 15%. So you get that from the ATO specifically to state that they don't need to withhold 15%. I believe that's what Wayne's asking about. It's a tax compliance administrative task. I don't think it'll fall into AUSTRAC AML.
Got nothing to do with a designated service.
I think that's a tax-related thing, Wayne. That's got nothing to do with it. So you'll be fine on that one. Angela Wellings has asked, does funds coming into our trust account from the ATO, like tax refunds, count towards item 3, particularly if they ask to pay it somewhere other than themselves? Which I think, I think generally from what I understand, it's a yes, but that last bit kind of makes me question it. So,
you mean in which last bit? Sorry.
So if you lodge someone's tax return, the refund comes into the firm's trust account, and then you usually hold the money to pay your bill and then transfer the rest to the client, the remainder. But she's saying if they ask us to pay it somewhere other than to themselves, so that's where I'm pretty sure the trust account.
That is a transfer of funds. Absolutely, that is a designated service. Yeah.
Yeah. So I think if it's your trust account, it's out. But if you're paying it somewhere else, I think I'd be red flagging that, similar to that discussion we had the other day in the webinar around the UK guy transferring monies directed by the client somewhere else other than themselves. I think it'd just be a red flag in general. So based on what I'm aware of, the trust account is you're fine, but sending it somewhere else, I don't know, that's a red flag to me.
I concur. It is a red flag. Yeah. And you can do it. It's not to say, look, and this is the whole thing. Like, this is the whole point of a risk-based approach, is that you apply a risk lens. It doesn't mean to say thou shalt not do business with, right? The only black and white in this instance is sanctions, in sanction entities and sanction screening. But otherwise, if you feel that this is kosher and it makes sense, absolutely do that. But you do need to then understand that the AML pipeline will need to be executed for that particular service or that particular action that you're carrying out, because it will turn on the pipe.
Later on, it could have other consequences if you didn't. So first question, is changing directors or shareholders with ASIC, so submitting ASIC changes to transact, with changes to ASIC and corporate secretarial work, will that be included in AML? So
the actual act of lodging that with ASIC, no, because that's just your requirement to execute on behalf of ASIC. But it's the underlying change that matters, right? So why are you changing it with ASIC? Is it because you're changing is it because that the information is being changed? The client is asking you to change information around the company? Well, then that is a designated service. So it's got nothing to do with what you lodge with ASIC. That's after the fact. The designated service is the client coming to you going, I would like a new structure, and either I'm this particular legal entity, I want to have a trust, I want to be a trust, I want to set up a trust, or
I want to change
I want to be a limited company, right? So all of that, all those changes, including the changes of directorships within those, are a designated service.
So once someone puts their hands up and says, I need to change something on my corporate secretarial work with ASIC, that will trigger an AML check, risk assessment. Is that fair to say?
Well, that will trigger the AML pipe, right? Yeah. And the AML pipe is everything, right? the risk assessment, the risk assessment tells you high, medium, low, the due diligence, the reporting if needed, right? And then they're sitting on your AML pipe, right?
Yep.
So,
This one's a bit tricky. So I'm assuming it's from a bookkeeping sort of view. If payments on behalf of clients, like if you're running their payroll or expenses, will this form a part of the AML low value transactions or ongoing ones? So it could be positioned in two different ways. Do we have access to their bank accounts and are we transacting? I think. Yes.
Yes. So low value have nothing to do. They're not designated as out of scope, right? So AUSTRAC says that when a designated service includes managing funds, accounts, securities, or other assets on behalf of the client, which includes making payments, transferring funds, receiving or dispersing money, it doesn't distinguish between low value or high value payments, right? I don't know whether in the guidance they'll tell us anything about payments, like ongoing payments. They might. It would be good, but then it has to be managed. So currently, payroll or expense payments are not excluded, right? So they are at the moment sitting as a designated service unless specific rules come out later.
And I think I'd love for someone else to comment here, but I think I've read somewhere that people are saying bookkeepers don't have to do AML. But then I'm wondering, is it because they're BAS agents, bookkeepers, and not accountants? Like, is that going to be, that'll be interesting with where AUSTRAC draws that line, because I swear I've read somewhere, I'm not a bookkeeper, so someone might have to check this out for me, but I've read somewhere that they said they can still assist in that. But to me, that makes no sense. But I'm sure as an accounting firm owner, if we're in there doing stuff in their bank accounts, transferring money, I feel like there would be some sort of AML checks to go through the pipe and assess the risk on those transactions and what you're doing, especially if something was a bit outside the scope and a bit weird, as per Angela's question around the client saying move money to somewhere a bit odd. You might be going, oh, it's going overseas. Maybe this is triggering something else.
Yeah, and then you got to check where it's going, right? And that's a whole check on that. Sorry, question. Bookkeeper. Are we saying a bookkeeper is not an accountant?
Oh, that's a tricky question for the bookkeepers. There is lots of bookkeepers that are accountants. And there are also accountants that do bookkeeping. But there's also a difference between a tax agent license and a BAS agent license.
Right.
So I think it's going to be interesting, the AUSTRAC guidance in that position. I'm not going to get into that argument because it'll be a never-ending war of words online. So there's the next questions. What about
Pandora's box? But just to finish that off, it'll be dependent on the designated service, essentially. Like it doesn't matter what you call yourself, right? The fact is, if you're providing a designated service,
which would be number 3, managing holding money.
Yeah.
And I guess that'll be whether we're managing and holding the money in our accounts or managing and holding it in their accounts with access to it. So anyway, I think that's going to be a very interesting position. So what about a sole trader moving to a company structure? Does that trigger CDD event or existing clients? Like how do you see that?
That's number 6. So AUSTRAC says that we have to identify and verify many owners and conduct ongoing due diligence. If there is a different legal entity involved, that different legal entity needs to be.
So it starts with the pipe. It doesn't necessarily mean you have to do a CDD though, does it? Or that's the pipe of what?
No. The AML pipe is the AML pipe, and CDD and a risk assessment sits on it. CDD sits on it. Reporting sits on it, right? So when you don't have to do a CDD, it's when you're not providing a designated service, right? So I think maybe people are thinking risk-based assessment means you get a choice. The only choice you get in a risk-based assessment with a risk assessment, right, is if you're low risk, you may not have to do ongoing due diligence forever or much at a much greater time interval. Right? But you will have to do CDD. It may be a bit simplified. You may not have to ask some specific questions that you do for a high risk, but you will have to do CDD.
What's CDD again?
CDD is customer due diligence, which is that kind of guts of what you need to understand from your customer.
Stupid 3-letter acronyms.
Another CDD, that's right, KYC, CDD, used interchangeably in Australia, but a little bit different globally.
So would it be the same as if we're setting up a company or a trust or rolling from one entity to another using any of the SBE, anything like that? That's going to still be the same process.
It's a company is a different legal entity to a sole trader, which is a different legal entity to an individual. All of those will trigger AML, the AML type.
Yeah, so it comes back to that ASIC. People are always, one of the questions is always around ASIC. Someone's asked about, you know, being an ASIC agent impacts everything with AML. Is this true? We touched on that with corporate secretarial work just before. And I think talking about ASIC, being an ASIC agent doesn't mean you have to just stop being one. Is that fair to say? Like,
yes.
Just being like, I guess like a lot of people are trying to push away saying, oh, I'm not going to do the ASIC corporate secretarial services. And we talked about it a little bit in the last one around, do you keep it? Do you ditch it? Do you just absolve yourself if you say I'm not doing it anymore?
I see what they're saying. Yeah. So, I mean, you're going to have to do it for your client anyway, or they're going to go somewhere else, right? So, you know, if the client, it's the ASIC reporting is kind of after the event, as far as I'm seeing from the AML pipe. Like, once the designated service is provided, which is your client saying, I'd like you to affect XYZ change. I mean, you could say, no, go to another accountant, and therefore you don't have that, but then that client is gone, right? As soon as you provide the designated, as soon as you decide to support your client and change the legal entity or the underlying directorship changes or shares changes, whichever of those structural changes for the legal entity of your client, all of those are designated service. Yeah.
So pre-commencement customers. So someone would like to know if their existing customer, who's a majority shareholder, is foreign, and they make payments for, does this fall under any exemption? But I don't think I've heard of anything like that. Like if you're doing,
there's no exemptions.
It's like lots of red flags in that question already.
No. I mean, if you've got a client and you're not doing much for them, well, you're not doing anything for them, right? You're just doing their accounts year on year, then they won't trigger AML. If you've got an existing client that after 1 July, you're making a payment, you're affecting a payment or supporting them in a payment or doing anything on the company structure, global or not, you're under a designated service. And as Clayton said, the foreign exposure tends to be generally a bit more high risk.
Yep. So the risk starts going up depending on where they're located. Will also dictate the risk exposure for you and the firm.
Yeah. And I think that will be a good session. This is a good segue into the risk assessment and risk-based approach, which we'll do in January. Yeah.
I think this one's a bit tricky. It may not be your area of expertise. What happens when the transfer accounting practice? So can the pre-existing work be used? So if I buy an accounting firm and I take all their clients on and they've already done a lot of AML ID work, can that be used? I think it's no.
No. So in the value chain, because AUSTRAC understands there will absolutely be leakages, right, in the value chain. And I suppose if you're buying customers, then you can say that this is a value chain as well, right? You're buying something and lifting it over here. You can absolutely place reliance on what they've done. However, the risk is on you if they haven't done anything properly.
Yeah,
right. So then you would need to do your own due diligence on who you're buying, to understand, to see whether you're comfortable that the way that they've conducted themselves, what they've implemented, they've got the right processes and procedures. So you then have to do due diligence on the company that you're buying to understand whether you believe what they've done makes is appropriate. So yes, you can place reliance, but the risk is still yours.
Yeah, because I'm pretty sure if you buy a firm now, you have to agent link them and do the ID checks within
on
that
the client.
Yeah, straight away. So the ATO has a different rule set to AUSTRAC. So that'll be interesting to see how that interacts.
AUSTRAC said you can place reliance on the CDD completed by other organisations.
Next one, what have we got here? we provide the registered office of clients. Should we change that from 1 July? That's that ASIC corporate compliance concern coming out again. I think that a lot of people have got that. I think you just got to charge more for it. If AML costs more money, but for clients, I think it's another value add. Like if someone wants that comfort of knowing their accountant's got them covered, then it's going to cost money, but it's going to be handled.
Yeah.
Specific situations. This is a good one.
Yeah.
I'm a director or a shareholder for clients. So maybe estate planning, trusts, that sort of thing. So are they going to be caught if they're attached to their clients' entities or transacting in some way? Like, I think that's...
Say that again, sorry. Say that again.
If I, as the accountant, attach myself as a shareholder, director of a client's company, and or if I am attached to their estate planning for their trust, maybe it's a testamentary trust or something like that. Like, am I exempt because I know my company, I'm about it, but is it separate to Business Edge Advisors, and therefore I've still got to do my AML checks on a company I'm a director of or associated with?
Yeah. So just because you're associated with it doesn't exempt that company from going through the AML pipe.
Cool.
Which means that when you store information around your client, you would then have to store information about your good self from an ID&V point of view, depending what other beneficial owners there are. You have to go pretty much all the way down up to a 25% ownership of the company. So yeah, there are no exemptions if you think with a good.
If a client receives cash and it's for tax purposes, do we need to report it? Like, there's an ATO position there that, yes, cash needs to be reported for tax purposes. But what about, if it's $5,000 or it's $15,000, how does that interact with AML requirements?
So, yeah, so the threshold for cash within the TTR, oh my God, threshold transaction report is 10,000. Okay. So any cash that you receive over 10,000.
So we have to report it though, or the client?
No. The client doesn't report it because the client is not caught under AML under the Act. Yep. We are as accountants here. So it's the accountant.
If we see the client getting, $15,000, $20,000 of cash into their bank account in big lump sums, we need to risk assess that cash.
Okay, now into their account. So if we receive into our accounts, we're caught under the Act, right? So we have to do a TTR.
Yep.
Now, if there is cash coming into our account and into our client's account, technically that's not our account, so TTR isn't triggered. However, I would say a suspicious matter report, an SMR, is triggered because when you're looking at all this cash, you're like, only if you're feeling a bit like, where does it come from? If there's a whole lot of transactions within your client's account that are slightly bizarre or just bizarre even, that would probably warrant a suspicious matter report, but not a TTR, because a TTR is only on our own accounts.
Yep.
Cool. Again, if they change the rules on me, then it's the thing. I just caveat that, but that's currently how it operates, right?
And that's where the banks, that's their obligation, is to do that.
Due diligence on our accounts. That's right, because that product is provided within the infrastructure of the bank, which is why the banks have had to do this TTRs for a very long time.
Cool. Okay, so this one's an interesting one. Does having access to a client's zero MILD files with a payment authority trigger AML? So I'm guessing they don't have access to the bank accounts, but they're creating maybe ABA files. I don't think Xero does it anymore, but used to be able to issue expenses and make them paid and auto direct debit from NAB within the app. So I think some people could still have that ability. I don't know if MILD does it. I don't use MILD, sorry. Maybe someone can comment in the chat about that one. But yeah, if I'm transacting in Xero or MILD on behalf of a client's bank account, would that trigger AML?
So
I don't have access to their bank account, just their app.
Yeah, so access alone is not determining, doesn't determine, whether you're caught under the Act or not.
Does it trigger? Well, it's an asset. You're still controlling and managing. It's still number 3. I think it triggers it.
If you make a control payment, this may fall within the scope, right? but they're at the moment, AUSTRAC doesn't give us any specific guidance on accounting software permissioning.
But I think it's a bit broad, and that's why they say other asset for clients connecting to a deal. Like if you're dealing with their stuff, again, if it's just day-to-day normal activities, I think you'd be fine. And a part of that AML pipe risk assessment, you'd be like, no, this is just normal ordinary course. If you're transacting and doing some weird stuff, sending money overseas, you probably should start triggering AML SMRs and flagging it. And I just think that's just common sense with anything.
What can you just tell me, what kind of payments would accountants do on behalf of clients?
I think it's just the equivalent of bookkeeping in their apps. Can anyone comment that they do this now in Xero or Mile? I remember Xero did it 5 years ago, but I think it's now gone from the app. I don't think you can do it anymore. I'll go to Guy's question. If a discretionary trust holds shares in a company, how far down the line of beneficiaries of a trust would you go looking for that question?
25% ownership is
the trust. A trust doesn't.
You don't have a
beneficial. They're beneficiaries that don't have any ownership of a trust. So it's a bit, yeah.
I mean, in financial services, we'd go as far as we could.
Yep.
As far as is possible to go. So we'd go all the way to the end, I'd say. Yeah. I mean, I'm hoping you guys don't have really long and complex chains in this sphere.
I think it'll be interesting, Guy, because beneficiaries are not owners of the entity and they don't have any control or ownership. I don't know.
No, but the UBOs, or the ultimate beneficial owners, have always been in particular interest in the space because they're the ones who the funds are disbursed to in the end. So they are effectively, potentially, if you've money laundered through 3 or 4 different levels, through 3 or 4 different layers, they're the recipients of the cash. So this is why they are important to identify.
So if I'm onboarding a trust and they've got 50 beneficiaries, do you think I would do an AML check on all 50, or just when I trigger the distribution to one of those beneficiaries when transacting on their behalf and doing those sorts of things? Or do you think it's when onboarding? Because I feel like you would do the main ones, and then if there was some weird stuff, then you would be like, we need to pull that out. Maybe this will come back to AUSTRAC guidance. It's a very
100.
One of those ones where it's an outlier. I feel like this is an outlier question. It's not a.
In banking, you would ID&B every single one. Sorry. Now, I don't know if there's going to be any kind of changes to this legislation. Let me do some digging on that, because in financial services, it's a full ID&B on all 100. Yeah.
So the 25% ownership applies. I think it's the named beneficiaries is a yes. Described classes, children's, maybe you do an ID checks on them. But this is the thing. I think this is where hopefully the AUSTRAC will help.
Yeah. Look, yeah. But let me take that one away.
Come back. More fun for later.
Yeah.
Guy did say that he can pay employees super and trigger direct debits and things like that for them. I'm not sure that would really form a part of AML. The risk of that is probably pretty low, that you're paying someone super. It's not, I don't think. Again, it'd be interesting on the guidance. I think that'd be a very low risk either way, Guy. I think the whole point of this is to find the high risk issues where people are transferring money and laundering money.
Yeah, super payments. Yeah, they could be being laundered and putting them into super vehicles for longer term use.
Mm-hmm.
Let me find out about super payments. Yeah.
Cool.
Yeah.
I think the other program requirements, there's talk about reviewing it every 3 years. Who's going to do this work? What does it cost? Like, is that going to be a thing to get people to review our AML compliance stack?
Yeah, so it should be independent reviews, and an independent reviewer is effectively some other individual or company that did not write this for you, right, and did not implement it for you.
Do you think it'll be a certified person or something like yourself, or do you think?
No, it'll have to be somebody who has been, there are no lists, but it would be somebody like me who has got experience in risk and compliance and who has been running an organization in this space, or, is active in the space and has got some testimonials behind them. So
I guess it'd be similar to like if you went to AUSTRAC and they audited you, and you went to old mate down the street who had no clue about AML and got them to check your stuff. That'd kind of be a red flag to them. Like at the end of the day, you're going to get fined if you're doing stupid stuff. Is that fair to say?
Yeah. Look, and at the moment, the way AUSTRAC is viewing it, they're beginning to name all the providers who have helped people as they have gotten fines. Like some of the gambling sector recently have had some few companies named, and some of them were good companies, right? So so the onus is definitely on who you go to, because like me, like I don't want my name dragged throughout the courts, right? And much as well yours. So there is definitely people will understand that there is some sort of elevated, risk that comes with providing assurances, or not even assurances, but reviews of the information that you have completed. But there isn't any registers. Yeah, it's just somebody who you can demonstrate has had the requisite, experience and expertise in designing and implementing them. Yeah.
Is that a problem for 3 years from now?
0 to 3. Yeah, you can look. It's probably if you've done it on your own as well, it might be good to within a year before you submit your compliance report, get an annual review, get one of those independent reviews done. If you've had a company put it in for you, then maybe you wait 2 years, but if you're on your own, I would check it within a year just to make sure that things are operating properly. So yeah, it's between 1 and 3. Some banks I know have done it every second year, some banks every year, depending on where they are in the cycle of maturity.
Cool. As part of AML compliance, do we need a copy of all the trust deeds of all of our clients?
Well, you'd only have trust deeds on those that you're providing a designated service to as you provide that AML service. So no, anything pre-commencement.
When it's triggered is when you need the deed.
Yeah, when it's triggered, correct, yeah.
So if you are interacting with a client and nothing changes. Once that AML designated service is triggered, then you need to go, I need to see your deeds, I need to see your ID, I need to do your checks.
Or what other
what's needed? What
do you need to identify and verify the beneficial ownership of that trust, right? And the individuals within that beneficiary structure.
This is a this one's a bit triggering because I'm not sure there's an answer on it. Do you have an opinion on the AUSTRAC small business pack they're going to release in 2026? Like, has this been done before for real estate or anything? Like,
when you say the small business, do we mean all the guidance for the?
Yeah, like, what's your opinion? Like, at the end of the day, I'm like, everyone's got an opinion. Everyone's got.
We've got an opinion. So my opinion is this: that prior to this point, and no other regulator has really done this because they don't want. They've all said we don't want a cookie cutter approach, right? So they've all said this. However, when you're implementing things to a large swathe of population, like 100,000 new entities, right, are going to be caught, the only way to streamline the direction of the work that you want to get done is by providing some templates. And they're not going to use the word template because they said they're not going to use it. So they're going to use the word guidance or business pack, but they're in fact templates. I think it's a really good idea. Absolutely. I think it's a great idea. However, what they are also not going to say is just because you've implemented it and then something happens later on the track, but you've not done anything with it, by implemented it, you just take it on board and put your name on the front, that doesn't mean that you're compliant. So the risks are that people take the templates and think they're done when implementation of the legislation is a whole, it's a whole thing in itself, right? So my opinion is it's great. It's really good that they've done it. I haven't seen them. I do know some of the people that are working on it, and some organisations that are working on it, and they're good. The people that are working on it are really good. But again, just because if some few individuals are good doesn't mean that the overall product's going to be great, right? So I think the proof will be in the pudding. It's definitely a good thing to have something like this. Yes.
Excellent. Yeah. So we'll start to wrap it up. Ask questions if you've got them, but moving forward?
Yeah, here's the implementation timeline, which kind of feeds off the checklist, kind of high-level checklist that we put in front of you a few weeks ago. So this is where we are today. That core guidance templates is what we've been talking about. That has moved twice already. I'm really hoping it doesn't move beyond the end of Jan or start of Feb, because that is, that's not very helpful. In phase one, which is awareness and prep, which is, ideally you would have started this already, right? So understanding what designated services you provide. So I put a diagnostic and op model because that's what we do. That's what my company LYRA does. When I say operating model, I don't mean like an operating model for your entire organization, just compliance operating model. How does that whole pipe look within your organization? So you understand, the bits that you need to do at what times, and how the governance should sit around that. Your implementation planning, starting your awareness and comms to your people and potentially to your customers, confirming what budget you've got. Do you have tech support confirmed? And obviously, I've always said this isn't rocket science, but when you mesh it all together, and for some of the things that you need to do, obviously having an automated workflow will help you inordinately, especially when you've got more clients rather than less. And also then you'd really need to be on top of everything yourself rather than having a tech. So tech is a massive enabler. Obviously Seamlss is, if you're all Seamlss customers, it's great because Clayton's bringing out the right modules that will cover it all. But I would really start thinking around how you're going to do it, because January will be gone, right? You all know January is gone. Feb. Yeah. So that's phase one. Oh, sorry. Does somebody?
No, that's it.
Keep going. So phase two is the build. So this is around getting your training out to your people and your boards, if you have them. Board training is always a little bit different to your AML awareness, because it kind of brings it up a level. It talks a little bit more about risk. And again, we can do that with boards as well as, and that tends to be a bit more, if not face-to-face, certainly one-to-one, whereas AML awareness training can be done via modules, which we're in the process of finalising happily. Technology onboarding, if it's new tech, getting in your master Bible program, policies and procedures, understanding what you need to be doing, getting the right skill sets in there, risk assessments, reporting, enrollment with AUSTRAC starts. Phase three is that couple of months before go live in July, making sure all your staff are trained as they should be, finalising all your key docs, completing your enrollment, running some test cases through the pipe so that people know what they're doing, and no one's caught off guard when you actually have to do it. So we usually call it user acceptance testing in technology land. Then you've got governance and getting it up and running, making sure that you understand what works, how you're going to discuss stuff, and what happens if something goes wrong, or what happens if you find something dodgy, like what do you do? So that all is helpful with the governance. And then you've got like a go live readiness checklist. So you check everything off, making sure that 1 July, happy times, you're ready to go. Not perfection, as we've said before, it's just getting your building blocks right. And then phase four is post-go live, is your embedding, hypercare, feedback, reviews, quality assurance, making sure the governance is running as it should, weekly and monthly reviews, yada, yada. So that's the 4 phases of implementation.
Excellent. And obviously they can come see Seamlss. We've got some help and guidance. We're building more things out for go live. So yeah, that's coming.
Great, absolutely. And we're actually working with some of your good peers today already, getting them booked in. So as we mentioned last time, clock is ticking. We are giving a 25% discount for those companies that book in with us by this side of Christmas, so that we can schedule in. We've got potentially one large client coming in, which will be quite busy. So the quicker we know who would like some support, we can schedule you in, and then it'll be first come, first serve, obviously.
Yeah, and I think that support's going to dry up pretty quickly. Like
there is a finite amount of help, and good help as well, because you know that you've got an AML analyst saying that they've, that they can help you implement something, and they've worked in the space for 2 years, right? Don't go there.
Or not even. Might be months. Yeah. And that's my concern, is that, But that's why we're here. We're doing this to help firms, and we're going to keep doing this on a monthly basis or fortnightly, depending on how we can go for time. But we do have another one coming up on January the 22nd, when everyone gets back, hopefully. So the next one, we're going to do another forum just like this where you can come ask questions. I think we're going to focus on the risk-based assessment, depending on what guidance comes out, Ags. Like if the guidance comes out, that could be a different conversation.
It probably won't be out.
I can be optimistic.
My birthday on the 29th. I will eat my hat if it comes out on the 29th. But anyway, let's see. It would be great if it did. If it was, it's supposed to come out at the end of Jan. Look, if it comes out on the 22nd, happy times, right? But I think irrespective of whether it comes out or not, I still think we should do risk-based approach assessment, because that is essentially your big trigger as to how you actually look at things and, you know, what lens you put on, what BDIs you put on your AML pipeline and your clients.
Love it. Love it. Appreciate everyone's time. Juanita, we'll try and get out some stuff, work up some things for firms to use to help guide you through that question there. Appreciate everyone's time. Really hope everyone has a great break, Christmas, holiday. Hopefully you get a break. Hopefully everyone's going to have some time off. I know I will be camping and relaxing. But yes, thanks for your time, Ags.
Thank you very much, everyone. Merry Christmas. I'm going to be driving up through actually central regional New South Wales, through Orange and Armidale before the 6th of Jan. If you want to have a chat, I'll be on the road with my son. So yeah, I've got a few weeks off, but I'll be back on deck on about the 21st. But in the meantime, if you'd like to have any questions, absolutely get in touch. We can also do like one day AML 101 sessions with you guys as well. I mean, it's fairly fluid. Merry Christmas, everyone. Almost there. Almost the end of the road.
Almost there.
It's been a long year.
Yes. Excellent. Thank you. Thanks, everyone.
Thanks, everyone. Take care. Bye-bye. Bye.